Thanks, Adelaide. Kenya's main electricity generator, Kengen, has posted a 109% jump in pre-tax profit for the full year to June 2015, thanks to growth in its geothermal power capacity and higher electricity sales. The firm injected 280 megawatts of geothermal power in 2014, helping to lift revenues by 47% to 25.6 billion Kenya shillings. As a result, pre-tax profit for the year jumped from 4.2 billion to 8.69 billion Kenya shillings. However, the firm's after-tax profit was even higher at 11.5 billion shillings, thanks to a 2.8 billion shilling tax credit brought about a 150% investment allowance given to the firm's All-Career 4 project. And going forward, Kengen says it will be restructuring its balance sheet and also looking to raise additional funding for its other projects. Kengen's share gained 19.88% in Tuesday's trade, closing at 9 shillings and 95 cents. And Kengen's managing director, that is Albert Mugo, sat down with KTN's business reporter Adelaide Chengole to discuss the results and tell us about the firm's future plans.
It has been a bad year for many of the companies in Kenya, most of them posting either reduction in profits or outright losses. But Kengen has backed that trend and has posted a 308% jump in its profit after tax. And we're joined by engineer Albert Mugo, the managing director of Kengen, to tell us more about this result.
Profit after tax will actually grow from 2.8 last year to 11.5 this year. Of course, it looks strange that the profit before tax is 8.6 billion and the profit after tax is 11.5 billion. But that's basically because of tax credit that we get as an investment allowance when you commission or when you put up a plant outside Nairobi. You get a 150% in terms of the tax credit. So that's what has driven our profit after tax to be higher than the profit before tax, because we got some tax.
Right, it was a mismatch with the current taxes by about a billion shillings, and the finance director said, you know, there's plans to raise additional capital. So perhaps you can tell us, what measures are you looking at? What exactly are you looking at to raise this additional funding?
Okay, what we're doing is we are thinking of a balance sheet restructuring, and one of it, the major part, will be a cash call. And we did get approval from our shareholders in December 2013 for a rights issue. Then it took us a bit of time with that program, because government being 70% shareholders in our company, we needed to consult with government on how government would take its rights and whether in fact there's appetite for that. So we had consultations with government, and finally government said, give approval actually in March this year, that if we go for rights issue to take its rights. And so it's after that we've been able to procure a transaction advisor who we are, since June this year, we've been working very closely with them, and we're at a point where we are almost ready now to start going to CMA, the regulator, for approvals and all that. And so we are working on this with transaction advisors, and very soon we'll be going to the public to give a program of rights issue. But as of now, because we don't have any approvals, I can't talk about it.